Very good morning, friends. I'm Nalnakshi Swami, welcoming back to my channel. Many of the indicator buyer, EP, episodic pivot indicator buyer, they're asking me the question that why both the EPs are triggered. For example, this is the EP. Yesterday it has been triggered around 26th 11 20 yesterday. Both the EPs were triggered at the same price, 25,948, and bearish EP and bullish EP. You can see over here marking about this bearish EP and bullish EP. Why these are both the EPs will be triggered? That is the question of the many traders. See, when the market opens, there will be overnight orders plus gap movements. You can see these are the overnight orders and the market has gapped up. When the market opens, all the pending orders, whether it is foreign investors, DIIs, retailers, get executed together. Because of this sudden imbalance, price can spike in both directions quickly, touching both CE and PE EP zones. EP is based on price action, price reaction, not bias. Episodic pivot marks the reaction levels. These are the reaction levels will be marked on the chart, not bullish or bearish confirmation. You should think that bearish EP or bullish EP is not the bearish confirmation or the bullish confirmation. Don't misunderstand that. This is the reaction level. So, at the open, if the price wicks up, CEP triggers. If the price wicks down, PEP triggers. This does not mean both are valid entries. It only shows the volatility at that moment. Because there is no structure at the open. Can you see any structure in a single candle? No, it is not a single structure at the open. Structure means the market or the price has to make an higher high, higher low, and if it is going down, it is making a lower high and lower low. That is the structure. So, episodic pivots marks the reaction point at that time. Only after the first 15 minutes, direction settles in the market. Once the initial volatility cools down, if the price holds above the CEB, then CE becomes valid. That is the idea. You can make out CE becomes valid and it is a reference level. EP creates the reference frame for the day, just like VWAP gives you reference for fair value. EP gives a reference for first control zone. This is the first control zone over here. And also first rejection zone, first breakout zone. Remember that first control zone, first rejection zone, first breakout zone, and first reversal risk zone. So here, yesterday, what happened? This was the control zone and breakout zone. This breakout above the CE level triggered the buy EP market moved higher. So, what you need to do is these are very, very important levels. CE and PE levels are important before the market structure forms. That's why. See, I've created rolling pivot reversal magic. You will not get a balanced line immediately because you will not be knowing what is the balance line over here. Let me enable this rolling pivot reversal magic. Only you get to know, see, it is gapping up, and you do not know when to enter into the market. So you will be scared to enter into the market when it is gapping. See, in this rolling pivot reversal, this thing, price has gapped up above the R1. That means it is overbought, but you need a reference point. You are getting a reference point in this, and 25,948 is the reference point for your before the structure forms. There is no structure over in the single candle. Then, if the market moves higher from this level, this is the reference point. So from this reference point, market has moved up higher. Suppose if the market would have rejected this level, this could have become a reference point for the sell EP, downward movement. So this level became a reference point. 25,948 is the reference point, and when the price starts moves above this, you can comfortably take the trade with this EP reference level. That is the idea of the PEEP. Think of that like this: before a person starts walking, before the structure forms, they first shift their weight to one leg. That small shift tells you which direction they may walk next. EP does the exact same thing. EP shows the first reaction zone of buyers and sellers. Before the trend forms, EP shows where the first big buyers and sellers are sitting. These are the first footprints of this smart money. CEEP is the first area where buyers defend. PEEP is where the first sellers will defend. That is how the EP is detected. Don't get confused with the EPs. EP is a reaction levels. By knowing those levels, you will come to know, you will have a reference point in the market and you can trade better along with the rolling pivot and the trend. You can see I am on the 1 minute chart just to show, because it was a huge gap up. When the market gaps up so much, if I measure this gap up, this is almost 80 points gap up in the market. Many times market gaps up even 80 points. Even the day before yesterday, market gapped up 80 points. Then the direction was to the downside. Here, if you go back to the yesterday's point, let us go to the 15 minutes. I'll reset the chart. I'll remove all these writings because I wrote this, because you should know what is what. Right. See, this is 26th. There was a reference point yesterday on 24th, not on yesterday, but it was on previous 24th, and from the 24th, the EP was triggered, buy EP and sell EP was triggered here. If I put a rectangle to this candle, and let me take it, extend it, this, or style. Let me extend right to this. See, from this level, sellers have defended, and the market showed a leg to the left, and it started moving down. So a structure was formed, lower high. And here it was a complete breakdown and the market moved higher. So bullish EP was formed over here, and it showed that it conquered this area and price started moving higher. So now this is the flip zone. 26,136 is the flip zone, and the market is a reference point now for the next day. Probably you can understand here the EP was formed both buy and sell EP was formed on this day, but the market tried to move higher. That is the beauty of this. These are the reference reaction points when the market goes. If I go back, there is a level, so we will take in between level, okay? We will take the in between these levels. Let me mark this. If I mark this, see how the market crossed all these levels and has moved higher. So EP was triggered, market went high, it came down and it started moving down here. So friends, uh, you understand what is episodic pivot is the high volume reaction levels at the open from where the market will pick up the direction. That is very, very important. Before the structure forms, EP a triggering will tell you where the direction may continue, and you can keep it as a reference point for your trade, and it will give you edge in your trade. It is like option levels, option open interest levels. You can make out very clearly, you can trade better with the help of two combination indicators. I'm suggesting two indicators. I've made three indicators, even CPR levels also. Those are also intricate levels. It will help you for everything. So that's how it is, friends. You need to understand this episodic pivot, and it is an indicator which I have created. It is not, no one has created till now. So you need to go to the option data. Even the option data, it is lagging and it is not properly provided for the retailers. Remember, friends, this is also a manipulation. It is not provided very clearly, but you get this reaction levels instantly on your chart. I have coded for that. So it is a beautiful indicator for your next structure formation, and you can take the trade with confidence. Thank you very much, friends. Nalnakshi Swami signing off.